Hey guys, this is Casey. Welcome back. Um, if you watched any of my videos previous to this, I covered in one of my videos on getting out of debt. Towards the very end, I was saying that I was going to create a video on utilizing different tools, financial instruments for investing. So if you've got free cash available because you paid off all your debt, congratulations. Now it's time to take the next step, which will be where do I put my money? And I know when I first started investing, I was asking the same question. Unfortunately, I didn't have anybody as a resource that I could go to who knew anything about investing. So I really, quite frankly, just had to do as much research as possible, trying to find out the ins and outs of investing, the different types of tools that you can use, the different kind of stocks that are out there in the stock market, what different markets I can invest in, things of that nature. So I want to start off by letting you know, again, if you've paid off your debt, congratulations, but in taking the next step with investing and knowing where to put your money and grow your wealth and create passive income, you need to start out, there's one step that you need to start out with like as soon as possible, like today. And that would be research. Research, and more research. I know before I even threw money down on the table with a company or invested, I did about 3 years prior, while I was getting out of debt, I took 3 years that I set aside. And again, this comes back to what I've mentioned in some of my other videos. If you haven't watched them, go back and watch them. But it has to do with that little phrase that I quoted, CDK every day. And it comes to discipline. Again, discipline and knowledge, especially in investing. Communication is part of it too, but it's not, some of it can be directly face-to-face investing where you're going to be communicating with people. I'm not at that level yet. That would be more for like people getting into real estate. So what I'm going to touch on today is mostly the stock market and investing non-face-to-face type investments, which would be like day trading, stocks, ETFs, stuff of that nature. But again, you need to research. Like I was saying, I researched for about 3 years prior to investing. And when I say research, I meant like I set a goal. I basically said, okay, I'm going to take 3 hours of my day, each day. And again, this is when I was paying off debt. And I said, I'm going to set aside that time just to research investing in stocks. Now, you can start by reading books, and I've got a book here with me today. It's called The Intelligent Investor. For those of you who don't know, this is pretty much the Bible of investing. It was written by Benjamin Graham, and if you don't know who Benjamin Graham is, he is a professor who Warren Buffett, for those of you who don't know who Warren Buffett is, he's a billionaire investor. He's pretty much a household name, so I'm pretty sure you guys know who he is. But Benjamin Graham was Warren Buffett's professor. And Warren Buffett took classes from this guy through college and ended up later on working for him before he started Berkshire Hathaway with Charlie Munger. So I'm actually in the middle of reading this right now. I don't know why I didn't read this earlier, but from everybody that I've talked to just recently in the last 9 months, I caught wind of this book about 2 years ago. I was busy in my day job, didn't really have a whole lot of focus, so I never went in and actually read this. But I'm in the middle of reading it right now, and I'll let you guys know, some of the information I pull out of this book. But for those people who have read it, bear with me because I'm not really going to touch on that today. So since I got out of debt, since I was researching investments 3 years prior for like 3 hours a day, I added all this up as far as research and the hours that I was putting in. And even after I got out of debt, I continued researching and investing. So total, I've got about, right now I'll be 34 in June. So I started when I was about 28 with the research. I didn't start investing until I was 30. Okay, so I've got close to 6 years of overall experience in investing. Now, that's not enough to be considered an expert. I'm no expert. I'm just making recommendations and suggestions here on stuff that you can do to help better you and prepare you for investing and your journey, after you've paid off your debt. So one thing that I've noticed with a lot of people, especially friends and some of the classmates that I'm in these, I've got a mentor program that I just finished up with Tai Lopez. If you don't know who he is, check him out. It's called the 67-Step Program. So I just finished that up, but there were some classmates in my classes that I was in that were coming to me, along with some of my friends outside of, webinars and stuff of that nature. But one thing I noticed was everybody is asking the same question, and it just really comes down to people not knowing anything about investing. So they're going to people, who are actually doing it right now. I've got 2 or 3 friends that have come to me just in the last year, because I was kind of pointing them in the right direction, trying to help them out with getting a plan together to pay off their debt. And so these people come to me, my personal friends, and then some of these people in my class were coming to me, and one thing they were all asking was, hey, what are you investing in? How do I invest? Where do I put my money? And so that's kind of where I'm going to start off with you guys as far as the topics that we're going to talk about today. And with investing, there's 2 types, okay? And if you're asking, what do I invest in? Well, it depends. It depends. You got to know your personality for one. And we'll cover that here in a minute. But there's 2 types of investing, okay? Now, there's investing, all right? And that would be the technical definition of an investor is somebody who is wanting to put money somewhere or invest in someone or a company, and they're expecting a certain return or an amount of money back on their investment. Okay, and that could be long term, it could be short term. Now that'll be your typical investor. Okay, there's people that invest in themselves. There's people that invest in companies. There's people that invest in real estate, their own business. So those are all investors. The other one is speculators, or speculation. And speculating would be simply day trading or buying a stock and then, buying it low and then selling as the price goes up, or as it's going down. So those are people that are speculators. They really, you don't have much. There's technical analysis and fundamental analysis that goes into speculating for like day trading and stuff like that. And I'm not going to cover that today. That's a whole different topic. But that would be your speculation. So if you ever hear anybody talking about speculating, it's because it's short term and usually deals with like day trading. So those are the 2 types of investing. Each one of them goes by a different plan. Okay, and I'm gonna get into a little bit of the planning before you get into investing here. So you got to start off, if you want to get a plan together for investing. Number one, how much are you willing to lose? Okay, now let me stop real quick and talk to everybody and just be brutally honest with you. When you're investing, you're going to lose money. Okay, let me say that again. You are going to lose money. There's nobody that I know of in the history of the world who has been an investor or a day trader or a speculator who has won 100% of the time and has never lost any money. Okay? If you ever hear anybody say that, their way is the only way, or they've got the answer to the crystal ball, run the other way as fast as you can. Okay, get away from them, because there's no such thing. Alright, so now that we got that out of the way, we'll come back here to this. How much are you willing to lose? Alright, is it 10% of your total amount in your investment? Is it 20%? That's something you need to ask yourself. And the reason why I'm getting into this is because, I'll give you a good example. Last year, I invested with a company, and I'm not going to mention who it was, just, out of respect for the company. But I had $9,000 tied up with this company, and it was a REIT, which is a real estate trust investment. It's through a commercial properties investment holding company. And so they owned a lot of properties and stuff like that. But something that happened, okay, and I want to touch on control real quick, because that's part of your plan. And the story I'm telling you right now has to do with control and how much you're willing to lose. Okay, because I'll be honest with you, when you are investing in the stock market, there's a certain amount of control that you aren't going to have. And I'm going to explain that in my story here. So with this company, I lost on a $9,000 investment. It was pretty much over a period of like 24 hours or a day. I lost $2,000. It might have been a little bit more than that, but I know it was $2,000, and I lost that within 8 hours. Okay, so I had to go back and I started checking. I was like, what the hell's going on? So I went into Google Finance, which is a tool you can use to read the news every day on the stock market. Excuse me. So I went in there, started looking up articles that were coming out, press information, stuff like that on the company. Come to find out, they had somebody in their upper executive management with CFOs and their accounting managers. They made some critical errors on purpose to cook the books on their company so that they could get more investors to jump on board with them, because their share price was looking pretty good. They were looking good on paper. And anyways, to make a long story short, I lost $2,000 in one day. Now, I could have stayed in with the company and continued, through that whole process, and just kind of praying and hoping, crossing my fingers, and then just hoping that everything would turn out okay and the price wouldn't keep dropping. Now, I made a deal with myself when I invested with this company, though, and I said I'm only gonna lose 30% of my initial investment. That's it. If I lose 30% on this investment, I'm out. And so that's what I'm saying. You have to be honest with yourself when you start making investments with companies. You need to have that exit strategy already in place. So remember, how much are you going to lose? For me, it was 30%. I lost 30%. I was done. I was out. No questions asked. I didn't even, think about it. It was just, that's it. So I went ahead and sold, took my hit, took my loss. But the cool thing is, my cash wasn't tied up anymore. So I didn't have to worry, or go to bed at night sleepless, because I was stressed out over whether or not I was going to have, $7,000 or what was left over in my account, next week. So it gives you a peace of mind. It takes some of the stress off your head, off your shoulders, when you start planning exit strategies, and that is part of an exit strategy. So that is first thing you want to do when you're investing.